And good afternoon. Welcome into Market Talk for this Friday, February 18th. Great to have you with us. Thanks for making us part of your day once again. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. Find all of our streaming sources there, Spotify, Apple Podcasts, much more. You can find, of course, all of the latest information on news of agriculture, all of our social media links, and much more. It's all online, markettalkag.com. Well, as we wrap up the trade this week and head to a long holiday weekend, we have plenty to discuss in the market. Trade grains were mostly firm to higher on the day. Hogs were higher again, cattle a little lower. There's a lot of things underlying in these markets that traders are watching as we head to the holiday weekend. Here to talk about all of it with us, Kent Beadle with CHS Hedging joins us this afternoon. Kent, great to have you back on, sir. How are you?
Well, I'm doing great today. Thanks for having me. It's certainly another interesting day to talk about the markets.
It is a very interesting day to talk about the markets, Kent. We appreciate your time joining us today. Let's dive right in. Looking at everything this week, it's been a very volatile week. We've kind of had this ebb and flow of all the headlines in the news and South American weather, et cetera, and really kind of finished, I would say, firm to bullish today.
Yep.
Um, there's a lot to talk about. I think on top of traders' minds, the most is probably the Russia Ukraine situation, and that seems to be the biggest driving force in our market trade this week. Would you agree with that?
Well, I think so. It's also probably the market factor that is going to be the most difficult for a grain market analyst to actually put his finger on and say, well, we think this is going to happen. Well, I don't know that anyone really knows what's going to happen. I'm not sure the White House knows what's going to happen. I think there's a lot of intelligence out there that maybe suggests that something is going to happen. We hear reports of ceasefires broken in the breakaway sections that Russian sympathizing Ukrainians have taken over since 2014. So there's lots of some military activity anyway that's already going on. You see things on social media about trenches being dug and about um, ordinary Ukrainians being armed and getting ready to fight. And then, about every third day, you hear that no, well, troops are pulling back, or we're going to have some negotiation and diplomacy, and maybe things will work out. Okay. Um, I think it's uh, I think it's difficult to really say, well, how is this going to impact the marketplace ultimately? Um, if in fact there is a military incursion, uh, a lot then is going to depend on the magnitude of that. I mean, is this a full out blitzkrieg assault across Ukraine? Are we going to be looking at a very quick ending to something like this, or are Ukrainians actually going to stand back and fight? Is NATO going to give them support in weapons and in air cover and things along those lines? There are some folks that I read and pay attention to that I have some respect for that would suggest that if the Russians do invade, that this could be not a quick 2 week blitz across the Ukraine by the Russian army, but a long year long type slog of a lot of fighting, a lot of lost lives. And if that ends up being the case, it's hard to imagine Ukraine agriculture being able to function normally. And that's a huge thing for this market if that would be the outcome. The marketplace right now has to only assign a probability to that. And I don't think the probability being assigned to that outcome is all that high right now. But it's possible. And some of these other outcomes are possible. And of course, it's possible that nothing happens at all and that this was one big, um, political bluff to try to gain some concessions in some areas that maybe only Putin knows what he's looking for. So I think there's a lot of volatility around this story that remains to be played out.
I think with corn and Chicago wheat today, we pulled back a little bit towards the close. Do you think that was maybe some traders getting out of some long positions ahead of this holiday weekend with all the uncertainty out
Yeah,
there?
I would say absolutely there was a little bit of profit taking going into the close. All things considered, though, given where we were early in the week when we had some, you know, promise of diplomatic solutions, it's still technically a pretty doggone good close on the charts right across the board.
Well, let's segue over to soybeans. I think maybe the bigger story there is South American weather, the falling production ideas. China, is China buying? We saw another daily sale today to unknown destinations. I know there's rumors of soybeans being sold out of the PNW. What's your thoughts in this soy complex as we wrap up the week and head to the long holiday weekend, Kent?
Well, I think that we're still dealing with the realization that the crop really ended up being as small as we feared that it could be a few weeks ago, but that many people didn't think it was. And last week, a day after the USDA crop report, when they lowered Brazil to 134, and Conab comes out and says no, it's 125. Oh my, I mean, that really is a big difference. We forget Brazil had a record crop last year, and that despite their record crop and a trend line crop that we had here in the United States, essentially maybe a little above trend, um, world soybean balance sheet was still tight. Okay. Um, we thought we were going to get bailed out from that situation with the additional acres. And now, if South American production, by many estimates, is now about 25 million tons below where it was a year ago, that's a significant amount of supply that needs to be made up for somewhere, considering what our disappearance of last year's production ended up being. And the marketplace took that large Brazilian crop, and it took our 52 bushel an acre decent US yield, and we're still sitting here with inverted markets and tight carryouts that are bound to get tighter as this export program that was expected to originate off the Gulf, or excuse me, out of Brazil, is now getting shifted back, and with, as you mentioned, beans going off the west coast, beans going out the Gulf of Mexico, unknown destinations showing up to buy beans on a regular basis. Sometimes it looks like Chinese business. Sometimes, frankly, it's looking like it might be Europe or some other destinations that are purchasing under that kind of cloak of cover, so to speak. But it's clear that U.S. export estimates from the USDA are going to have to go up. Okay,
Mm.
we're now on a sales pace and a shipment pace that is back on an upswing when we're supposed to be declining toward this 4 or 5 month period, spring summer, where we tend to not do very much. I think we're going to have a fairly active soybean export program to the tune of an extra 100 million bushels at least, over and above USDA's current estimates, maybe 150, depending on where you want to calculate out pipeline minimum. And that becomes another interesting calculation given the ongoing expansion of domestic soy crush. How many beans do all these plants need to have on hand on August 30th in order to continue to run going into harvest? Um, when we're talking about, you know, multiple expansions within the footprint of crush capacity that we have today, combined with the plants that are uh, either on the drawing boards or in the process of being built, some of which are going to open up, potentially this summer or next summer. Uh, it's just it's just amazing. But we're going to have more soybeans to carry out just to be able to consider yourself at a pipeline minimum sort of situation. And
Mhm.
that requires acres, and that's why it's really hard for the soybeans to break very far.
Well, and you mentioned acres, and I think the last time we talked, we were talking about acres and trying to make a guess what would happen, and I think that picture's still fairly muddy as we get closer to spring
Yeah.
planting. I mean, there's still a fight for acres, and so many things are up in the air. Not to mention all the issues we talked about: fertilizer prices, break evens, inputs, you name it. One has to wonder, what are we going to see for acreage as we get into late March, April, May, we start planting across the US. I'm very curious what we're going to see in the next 30 to 60 days, Kent.
Yeah. Well, here's your problem is that it's really hard to find a commodity out there that would be willing to roll over and give up some of these acres. Now, soybeans, that was the commodity that was the candidate for that in October, November, right? Because our yield held together, and we knew we planted a lot of acres, additional acres in South America, and you would have thought, okay, well, we've got some carry out, we've got a little cushion here, we can probably sacrifice a few soybean acres in North Dakota for the spring wheat that at that point in time clearly was going to get planted. Well, it's not that spring wheat prices for in the new crop time period are all that much cheaper. But when you're taking new crop soybean prices from 12.50 to 14 and a half dollars, the math starts looking a little bit different in the state of North Dakota. And when you talk to wheat producers in North Dakota and up in the Red River Valley, you know you talk about a group of folks who get fairly frustrated with trying to market wheat because of things like protein schedules, discounts that are pretty ubiquitous almost every year. Um, and what happens is that North Dakota, Red River Valley grows a certain kind of crop, and well, whatever that crop is what the marketplace doesn't want because there's plenty of that, and there's not enough of all the other blends and varieties and proteins and falling numbers, things that we need to have a good variety for the milling, for the millers. And so we they get discounted for whatever they have, and they get frustrated. And so what happens is that a more um, commodity like just sort of uh, a commodity like soybeans that is just a soybean as opposed to 14.2 pro 325 falling number bushel of wheat. It's a lot less specific. It's just a basic commodity, and it gets the price it gets. And I think that there's a move back toward planting more beans in North Dakota and a move away from planting spring wheat. And of course, what does that leave corn? Well, we're we 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 think we might lose a little bit of corn due to fertilizer prices. At least that's the trade anticipation. My anticipation is that we're going to have a hard time losing corn acres, frankly, because the returns to corn are just too good. And I believe that the American farmer has a reasonable percentage of his fertilizer needs priced, and in some cases already fall applied. So I, I I think there's a chance that we lose a few corn acres, but if soybeans are really going to go and grab a lot of acres, I think they're going to need to continue move a little higher in price, and B, we might need to have some we might need to have some really good weather in late March or April, because that's sort of the new thing these days, right? Your Iowa, Illinois grower has seen the benefit of early season soybean planting, and that could really impact a decision if he believes that the statistics are going to give him a 10 or 15 bushel per acre yield increase by getting out there and being able to get those beans planted into decent conditions in a decent weather profile. Now, we don't know if we're going to have those conditions, but if they happen to occur, that would also potentially help the soybean acreage situation. And that's a sort of a different thing than we used to have because, good early season weather used to benefit corn because we always planted
Mhm.
corn first, right? Well,
Yeah.
that's something that's changed a little bit, and we just are going to have to wait to see how those forecasts come out.
Well, Kent, overall, grain markets here, no matter what crop we're looking at, we do have great prices for many of these commodities. When you look out to new crop, I would have to think if I'm a producer, I'm probably wanting to at least, if anything, maybe protect some of my risk here and maybe find a floor just as we're looking at our marketing plan. Was that something
Right.
you would agree with?
Yeah. So, I'll be specific on our Agshurian consulting program. We're at 30% recommended on both new crop corn and new crop soybeans at this point in time. Of course, that means that we still have 70% left to sell. With really all of my clients, I bring up the idea, hey, if you feel comfortable, you want to hit the easy button and just get very aggressive and with whatever tool you're most comfortable with, get floors established on a larger percentage of the crop. Now, I'm all in favor of that, but I do believe that we're going to have weather volatility this spring. I don't believe we've made contract highs. um, and we did some work on the high watermark in January. The January highs, which have been exceeded February forward. 30 of the last 32 years in corn and 31 of the last 32 years in beans. Um, but since we exceeded those highs so quickly into February, I went and looked to see, do we tend to make any seasonal highs in the month of February? Well, in corn, we haven't since before 1990. So, the last 31 years, 32 years, we have not. And in soybeans, we did it two times. The last time happened to be that February when President Trump decided to start levying the tariffs on the Chinese, who then responded with the countervailing tariffs. And we actually made a seasonal high in February for reasons like that. I don't think they're very analogous. The other one was way back in the early 90s that also didn't look very similar in terms of uh, any sort of connection to this year's type of situation. So we do believe that between March and May, we're going to have some, springtime planting acreage battle type highs. And unless the weather ends up being wonderfully perfect, we'll probably have some of that. It's too cold, too wet, hot, too wet, too dry type of price volatility during the growing season in May, June into July.
Well, Kent, didn't leave us much time for livestock, but just real quick on cattle and hogs. This hog market's been on a
Yeah,
tear. Another great close here heading into the 3-day weekend. Cattle a little weaker, but still, I think there's some similarities and some differences between both
right.
cattle and hogs right now. What are your thoughts in livestock heading to the weekend?
Well, the numbers in hogs just are they're just not they're just not there. And as I talk with hog producers across the Midwest, what you continue to hear about is disease pressure. I talked with a Missouri hog producer here earlier this week who said that he's lost about a month's worth of production in the last 3 or 4 months. It's just been extraordinarily difficult. They're dealing with toxin issues in their feed. They're dealing, with PRRS. PRRS is, of course, a really big thing in other parts of the Midwest as well. And the hogs just aren't there. You can sense it in the way packers are calling and looking to get hogs bought from anyone anywhere. And so, we're concerned that on the next hogs and pigs report, we're going to see even tighter numbers. In the cattle, we've obviously got inventory issues there as well. But that market feels, I don't know, maybe just a little more tired. We're 3 weeks of very similar weekly settlements. Um, Obviously the high corn price has had some impact on feeder cattle. That's kind of keeping a lid on any further highs in live cattle. And while the prices are real good and the margins are not bad, technically that market doesn't feel as nearly as strong as the hawks do.
Well, Kent, great stuff as always. And I know if producers need some advice, they could reach out to you and the folks there at CHS Hedging to get a little bit of advice on their marketing plan, can't they?
Yeah, we can be reached at 800-328-6530. There's information on our website at www.chshedging.com. We'd love to hear from your audience.
Well, Kent, I appreciate the time and the great analysis as always, sir. We'll get you back on the show real soon. Enjoy your weekend, and we'll talk to you again real soon. Thanks so much.
Great, Jesse. Thanks for having me on. Really appreciate it.
Kent Beadle with CHS Hedging, our guest today on Market Talk. That's going to do it for our Friday, February 18th edition of the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.